fund is 1.5 trillion rands, and 5% of that will be allocated to South Africa, 5% will be allocated to Africa, and another 5% in developmental investments. So a total of 15% will be going to unlisted investments, including infrastructure, private equity, BEE transactions and the likes. We've actually started to allocate more recently. We've still got scope for a lot more. We've probably allocated a lot more in South Africa. In Africa, we've taken very slow steps in getting to know the market and understanding the market. It's also quite a small market relative to our fund again, so we are starting to increase our allocation, but slowly doing so.
From our perspective, we're really focusing on consumer-facing operations at the moment, like almost everyone else, but at the same time infrastructure as well as agriculture-linked services are in our focus, and we are opportunistically looking for opportunities across the region to really find markets, including growing economies like Zambia and Mozambique, obviously, outside South Africa, but as well partnering with South African operations and businesses to tap into those markets and expand their operations further. At this year specifically, we are looking into one South African-based GP who's going to focus onto Southern Africa as well, so quite aligned to our direct investment strategy. And we are mainly focusing on generalists if I think about our continental allocation as well. There's one Central African candidate who's more on the SME side, and the other ones are generalists for Western Africa as a focus.
We're actually quite optimistic. I think the opportunity in South Africa is growing, particularly because there's a lot of new GPs sprouting up at the larger space and at the medium space and the smaller space. I think OPIC's mission is to support sub-Saharan Africa in general, but then also to support South Africa. I think it's been unfortunately overlooked as an opportunity set, but for OPIC it hasn't been overlooked, so we'll continue to put money in that market. So OPIC is quite keen on renewable energy, and South Africa is largely in the forefront in terms of renewable energy, particularly solar. So that will be a focus for us. We'll look at real estate, we'll look at fast-moving consumer goods, but we're quite keen on supporting Southern Africa and South Africa in particular.
We probably developed our interest in Africa from originally just primary funds, so blind pool commitments. We've also now done some secondary transactions, we've done some direct co-investments. I think as we see it now, I think it's important for managers that we're back in South Africa to have shown that they can do the rest of Africa as well. You heard it earlier today in the panel, the importance of being able to penetrate some of the higher growth markets. So I think that is increasingly important, not just from a growth perspective, but I think when you think about how you're going to sell these companies, I think a lot of the international companies that want to build a presence in Africa, they don't just want South Africa, they want a footprint for Africa. And so I think it's not a must-have. I think there are still some managers that we support here that are almost entirely 100% South African focused. But I think for a lot of the other managers that we support, it's because we can tap into some of the opportunities outside as well.
There's a lot of developments that are positive that are happening. I did mention earlier on in my panel discussion that the reporting is improving. There's a lot of focus on ESG issues. Although I'm still complaining about the issue of transformation, I think there's more that we can do. Transformation is quite important. Obviously, people with track record, we're looking for GPs with track record. We're looking for people with a particular thesis that makes sense, that talks to reality, and people that can deliver what they are saying. So that's what we look at generally when we look at GP. The rest of the continent is important, although you don't want to confuse issues. There are managers who are very good in the South African market because they've operated there for a long time, they've got a track record, but equally there are those that have started venturing into Africa. So we're looking at a two-pronged strategy. We want to invest in South Africa, but we also have got an allocation that we would like to invest in the rest of Africa, excluding South Africa.
I think it's a bit of an inflection point at the moment where we see a lot of maturity in the market in South Africa. A lot of South African GPs looking outside the border. They've been talking about it for some time, but I think you see increasing activity actually, where it's sort of developing from talk into activity. And I think we're sort of cautiously optimistic in the sense that there's a lot of opportunity, there's a lot of growth in many of those markets, but the regulatory, the governance, the political and macro risk is actually quite different than South Africa. So we're enthusiastic and yet I think a bit was sort of cautious also about how things will develop.
When you talk about Southern Africa, you tend to think about South Africa. South Africa is a very mature market, relatively speaking, in comparison to other markets in Africa. But that's not a bad thing for private equity, because private equity needs the infrastructure, and infrastructure meaning the services, whether the lawyers, accountants, the banks, the capital markets, in order for it to function properly. And so South Africa in general is a very good market. The challenge for the private equity is more related to the individual GP, the people, the skills. Because if you're a mature market, it means that it's more competitive. And so for a GP, you have to distinguish yourself, and distinguishing yourself becomes much more difficult because you need to find the deals. You're not the only ones looking at that deal, and obviously you need to have the capital and pay the right price, and so that's a big challenge. So I am not worried about South Africa or Southern Africa. I think the industry has a great future. But I think the challenge is more for the GPs to live in this mature market versus 20 years ago, when the market was was more a growth market. Deals were easy to pick and easy to exit.
Well, I feel that it's not just all about returns, it's also about impact. I mean, that's, from a developmental point of view, we also look at the impact that some of these GPs can provide. And we look at the social aspects, we look at the educational aspects. So we are trying to look not just the measures of financial returns, but also measures of impact on the economy as a whole. We are actually looking for GPs that are looking into these kind of aspects, or more impact investments. It's not just about the returns that they can provide. The educational aspects, the health aspects in South Africa. I mean, that's now becoming one of the priorities for us as a developmental bank to look into, in terms of getting not just financial returns but also social returns into them.